Scott Bessent, the U.S. Secretary of the Treasury, wants to bring down the People's Bank of China. We are hearing this now from various sources. Additionally, Donald Trump is now causing the next crash in the stock market here. Bitcoin is also being dragged down. All the futures markets are deep in the red. When the markets reopen here, it could be that Bitcoin will also be dragged down. Donald Trump says here that he has let China fool him long enough. And now it's the USA's turn to fool China. But Bitcoin will be the massive winner of the current trade wars. This is a report that is now going viral on social media, which we need to examine very closely today. Soon the announcement from the US Federal Reserve will come. Please, Jerome Powell, help us, save us, give us a bailout package. Because currently, we see that Donald Trump's plan is absolutely not working to unsettle the markets, to drive people into government bonds, to bring interest rates down. We are seeing the highest increases in government bonds since 2022. In the last 2 days, there has been a massive increase, and it continues to rise. That means Donald Trump is crashing the stock market. Donald Trump is crashing Bitcoin. And now he has another problem that he can't even refinance here. And in the past, when we had something like this, and when no one buys the government bonds because China is currently selling government bonds at a record pace, the central bank has always stepped in. This leads to more liquidity entering the market, causing Bitcoin to be pumped up. Funnily enough, after I recorded the video, exactly this is happening. The probability of an interest rate cut at the next Fed meeting is now over 50% because there is so much chaos in the market now that the Fed has to react. And that actually means that the Valhalla boom could still happen in 2025. At the same time, we see that China is massively devaluing the yuan, now at a 2-year low, because they want to impose a countermeasure against US tariffs by selling government bonds and devaluing their own currency, so that people will buy China's products despite the tariffs. This is how currency manipulation can be easily conducted here. And at the same time, there is now more and more criticism of Donald Trump. And now there's a very, very interesting interview here with Scott Bessent, the finance minister in the USA, who talks about the purpose of the tariffs. And on top of that, the Bitwise CIO says that the current trade wars will lead to Bitcoin winning here. And it is becoming increasingly obvious that Bitcoin will be the winner of the trade wars here. Sure, you might not see it in the price yet, but in the USA, it comes down to having to print money. In China, it comes down to having to print money. Stimulus packages have also been announced there. They also want to stimulate the economy there. In the USA, money has to be printed to bring down the interest rates on 10-year government bonds because otherwise it might not be possible to refinance, or it would become so expensive that they would have to declare bankruptcy right away. That's a bit of an exaggeration, to be honest. But today, we'll take a close look at why Bitcoin will be the winner of these trade wars. And this statement doesn't come from me. I mean, I support the statement, but it's going viral right now because the Bitwise CIO said it. And we'll take a look at that first. And then we'll address all the critical things happening here. With Donald Trump, with Scott Bessent, China. And so
I think the answer to who wins in this currency war is Bitcoin, right? When I watched all the tariff confusion play out and what will Trump do and what will China do and how many bilateral deals will we negotiate, the thing that's clearest to me from all that is that we should expect the US dollar to move lower, that we're moving from a world of the US dollar being the sole reserve currency to a world with potentially multiple reserve currencies. Bitcoin benefits when fiat currencies go lower. Bitcoin benefits when there's new space for reserve assets. I think it's the cleanest investment response to the chaos and confusion we're seeing from this tariffs, specifically because it's the hedge against fiat currency debasement. And I think we're setting up for that in the US, in China, in Europe, and around the world.
So you've heard it. It leads to the conclusion that all fiat currencies will devalue, including the US dollar. And that's also what I always tell you: when fiat devalues, then Bitcoin goes to the moon. In the future, we will no longer have the one big US dollar, but we will have different currency baskets competing with each other. And when two are fighting with each other, the third one benefits. That's also what a few people commented below on my last video, where I already informed about this, that China is making a counterattack against the USA. The USA is attacking China again. We see various tricks behind the scenes, how currencies are being manipulated, how the mutual currency area is supposed to be drained. There are also rumors now that Scott Bessent apparently plans to launch a speculative attack against China. He wants to blow up the People's Bank of China. Of course, not physically, but in the form of a currency attack. We'll look into that later as well. And on the other side, there are those in China who want to harm the US dollar, or more specifically US Treasury bonds, by selling them off massively. I mean, just take a look at this. The yields on 10-year US Treasury bonds have risen by 30 basis points the largest increase within 2 days since 2022. If the US continues to provoke China, they will further reduce their $800 billion in US bonds, and Trump will have to finance his $9 trillion in debt at a high cost. So this is an absolute blow. It's an absolute game changer happening here, and many people don't understand it. We also see, since the trade war has been escalating, interest rates have been rising continuously. That means the more Donald Trump provokes, the more he gets backlash here. And that's not good for the USA at all. And what has always happened in the past when interest rates rose too high? In the long run, there was yield curve control. That means short-term interest rates can be controlled through key interest rate manipulation. That means if Jerome Powell lowers the interest rates, that's also what Donald Trump has been demanding all along. Hey, Jerome Powell, lower the interest rates, lower the interest rates, lower the interest rates. But the long-term interest rates can only be lowered if the central bank starts doing QE. Few people have asked again. In the last video, what does QE mean? QE means quantitative easing, or in German, quantitative loosening. That means the government bonds. On the global market, the US government bonds, if no one buys them anymore or if China even sells them, then the yields rise. The value decreases, the yields rise, and then a buyer has to step in. But if there is no buyer, then the central bank has to step in. That means the Federal Reserve starts buying these government bonds. Then suddenly the interest rate drops, and the value of the government bonds rises again. But this is a big manipulation. Then people in the market think, yes, okay, now the government bonds are in demand again. But no, they are not in demand. There is simply an artificial buyer creating fake buying pressure. And here, massively, I would say the whole story is manipulated. And there was a funny report here which said breaking, according to sources, there was President Trump admitted to the Treasury Secretary during a private meeting in Mar-a-Lago that he had messed up with the introduction of tariffs and wished he could take them back, but that wouldn't seem strong or manly. So this is definitely fake news. Clearly, this is not true. But I could certainly imagine that maybe Donald Trump is no longer so sure about his policies. There are also current projections here at Kalshi, a betting exchange, where currently the chances are at 48% that Howard Lutnick, the Secretary of Commerce, will vacate his position during Donald Trump's term, or has to. Luke Roman posts here, the current consensus in the USA is that the Chinese yuan is weakening as long as the 10-year government bond does not exceed 4.5%. Currently, it's at 4.3%. China is at the end, but we are not. That means it is basically a mutual bleeding out. That means who is bleeding out faster? Will US yields rise faster here, or will the Chinese yuan fall into the abyss more quickly? And then Luke Roman also says here, soon the message will come, save us, Jay Powell, you are our only hope. And so, the interest rates in the USA can be brought under control again. And on the other side, the yuan can be bled out. This could be Scott Bessent's grand plan to blow up the People's Bank of China, not physically, but in the form of a currency crisis. And he actually had a very interesting interview where he talks specifically about the purpose of the tariffs. And let's take a look to see if he is indeed playing with open cards.
If we put up a tariff wall, the ultimate goal would be to bring jobs back to the U.S., but in the meantime, we will be collecting substantial tariffs. As I've said, I believe on this show that if we're successful, tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
So officially, it's just about securing jobs here and potentially generating additional revenue through tariffs. But unofficially, it will probably be more about what Jerome Hedge is posting here. And indeed, it was said here that in 1992, Scott Bessent blew up the British central bank. Together with George Soros, we'll take a look at that shortly. And in 2025, he wants to repeat the same thing, but now with the People's Bank of China. Scott Bessent has already carried out such a currency attack, namely Scott. Bessent was a close associate of George Soros in the early 1990s at his hedge fund, Quantum Fund. At that time, Soros's team, which included Bessent, bet heavily against the British pound, which was part of the European exchange rate mechanism, RM. They speculated that the pound was overvalued and that the Bank of England could not maintain it at the fixed rate. The British central bank initially tried to support the pound's rate with massive foreign exchange market interventions. In vain. Ultimately, the pound had to exit the ERM and devalue significantly. The Quantum Fund made about $1 billion in profit. The United Kingdom suffered massive damage. And of course, the central bank here as well. And it was, of course, also a reputational damage and much more. And something similar could currently happen here. The only catch is that this time, everything could be much more complicated than it was back then with the UK, because now Sephidinemus is also getting involved in the whole issue. That is the author of the Bitcoin Standard. He says here, this is very insightful what Scott Bessent says. This is basically a direct comment here on his interview with Bansal. He believes China would have more to lose in a trade war because it has a trade surplus and would thus lose more money. He sees the loss. Further goods here from the USA are not seen as a big problem. That might make sense if imports were frivolous. But many of them are critical capital and infrastructure. People want money because they want the things that money can buy. And these things can be far more important than the money itself. So you don't necessarily want Bitcoin, but you want the wealth behind it. You want the Lambos, the Ferraris. You also don't want the dollars, but you want, I don't know, the restaurant visit, the vacation, and so on. That's what Sephidinemus is saying here. I mean, whether you want the Lambo or not, that might be another question. But you definitely want a better lifestyle and not necessarily some gold coins or something like that, or Bitcoins or coins. You want to have the purchasing power. Life is not a game where money. The benchmark is people want money because they want the things that money can buy. And these things could be far more important than money. The USA can conjure money out of thin air, but they can't build a world-class industry to replace Chinese imports at the same speed. There have been reports saying, yes, the USA can easily produce iPhones in the USA, but it's not quite that simple here. The crucial point that this finance trade perspective overlooks is that trade barriers harm not only consumers, but also local producers by increasing the costs of intermediate goods. If the USA wants to reindustrialize its industry, it needs access to the best and cheapest steel, electronics, and countless other important intermediate goods. However, China is now the leading producer of many of these important intermediate goods. If the USA imposes tariffs on China, it will become more difficult for American producers to manufacture most products competitively. For example, China produces more than half of the world's ships. So he goes on to give more examples of why the USA, I would say, will have a very big problem if they really launch a currency attack. Because it's not as simple as one might imagine. Guys, I'm signing off from El Salvador. See you then. Peace out.